In our sports headline, the KwaZulu-Natal province of South Africa says they are ready and raring to go for the 98th Comrades Marathon on the 8th of June. And Zambia's sports analyst Musonda Chibulu is lamenting the lack of investment into young footballers from the corporate world. I'll be back with the details at the bottom of the hour.
A very good afternoon to you, Ghana. Good afternoon to you, Kenya, Senegal, Eritrea, Ethiopia. Good afternoon to you, Côte d'Ivoire. Good afternoon to you, Eswatini, Lesotho, South Africa. Good afternoon to you, Malawi, Zimbabwe. Good afternoon, Africa. Welcome to Africa in Business on Channel Africa. I'm Thami Ngubeni. This is where you get the African perspective. It's where we meet to look at the latest in news, sport and business. We are coming to you live from our studios in Auckland Park, Johannesburg. It's gone exactly 8 minutes after 4 p.m. Central African Time. Welcome to Africa in Business.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus. Channel Africa, the African perspective.
Now, South Africa's economy was flat in the first quarter of 2025, growing by a marginal 0.1 percentage point compared with a revised growth of 0.4% in the fourth quarter of 2024. The agricultural sector mostly kept the economy afloat, while the whole secondary sector, which includes industries like manufacturing and construction, contracted. Dimakatso Leshuru filed this report.
South Africa's economy has been stuck in the low-growth trap for the past decade. It last grew beyond 2% in 2014 and only saw a 5% annual growth in 2021, and that was because of the low base effect following the 2020 lockdowns. Presenting the results of the latest GDP print for the first 3 months of 2025, Statistician General Rusenga Maluleke says the $94 billion economy barely kept its head above water in the 3 months to March.
South Africa's real economy, it is sitting at 1.7 trillion as of the first quarter of 2025. Now, let us go back to the time series in terms of how we have been doing. We can see that, for example, 2024, our economy in the first two quarters grew in the positive 0.1 and 0.3%. Again, in the third quarter, it went into 0.3 contraction. It went up again as revised 0.4%. And where we are now in the first quarter of 2025, we are sitting at 0.1% as an expansion. Of course, I can say when we look at these numbers that our economy is not growing sufficiently enough. So it is easy for it to slide to the negative at any given point.
4 of the 10 industries on the production side of the economy recorded positive gains, with agriculture driving most of the upward momentum. Household spending, stronger exports and a drawdown on inventories kept the expenditure side of the economy in positive territory.
Of course, while they grew and indeed contributed the strongest they could not offset a minimal growth of 0.1%, which was largely led by a drawdown that came from industries such as manufacturing. The sectors as in primary grew in the positive as well as tertiary in the positive, 3% as well as 0.4% respectively.
Independent economist Elise Kruger says if the agricultural sector was stripped out from these numbers, the economy would have contracted.
Overall, the figures remain disappointingly low. If you look at the year as a whole, I think South Africa could only look out for like 1% real growth for 2025. So the economy remains in muddling along mode. We urgently need structural reform measures to push economic growth forward. We also can do with this, further monetary policy loosening. to get some stimulation on that front. So from a point of view of the bigger picture, the economy remains quite weak.
Mining was the biggest drag on the economy, declining by 4.1%. The secondary sector of the economy, which includes construction, manufacturing and the electricity sector, was a drag on growth after all three industries contracted, with construction down 3.8%. Electricity and manufacturing were both down 2.6% and 2% respectively. Professor Raymond Parsons of the Northwest Business School says structural reforms are necessary to address the low investment into the economy. Gross fixed investment declined by 1.7% in the first quarter.
The manufacturing sector has shown itself to be a lagging sector and has detracted from the overall growth performance of our economy. Then also, of course, there is the negative trend in private and indeed public fixed investment, which is an important driver of growth. So the message really is that we must get on with the structural economic reforms and the infrastructural spending to which we are committed so that we can improve our growth prospects in the next couple of years and underpin and strengthen the incipient but weak economic recovery which the present growth figures display.
Maluleke downwardly revised growth for the last quarter of 2024 from 0.6% to 0.4%. On an annual basis, the economy grew by 0.8% year-on-year compared with the same period in 2024, where growth was only 0.5%. For Channel Africa News, I'm Dimakatsole Shoro in Johannesburg.
Africa in Business on Channel Africa.
It is exactly 13 minutes after 4 p.m. Central African time as we cast our eyes now to Nigeria. Now, that country is currently importing dairy cattle from Denmark, and this is part of its plan to double its milk output within the next 5 years. And what they're wanting to do is to cut their dairy imports, which are currently costing the country $1.5 billion a year. Nigeria has one of Africa's largest cattle populations, but the country still struggles to produce enough milk for its people. The country currently produces 700,000 tons of milk per year, but Nigerians consume 1.6 million tons annually. That means that it has to import about 60% of its milk from other countries, thus creating a huge gap that costs the nation $1.5 billion a year. For more on this, we joined on the line by Dr. Adeniyi Ifetayo, a public affairs analyst and media consultant for The Rich, Famous and Influential. A very good afternoon to you, Doctor. Welcome to Africa in Business.
Good afternoon. It's my pleasure to join you from the city of Abuja in Nigeria.
So, Doctor, how big is Nigeria's current milk import bill, and how much will importing these cows actually cost the country?
You know, to start first and foremost, the Ministry of Livestock was just created last year from the Ministry of Agriculture so that they can deal with the issue of livestock holistically. And going by their budget is grossly inadequate. And we know the essential vitals or ingredient or component of milk that is needed generally. And of course, the president has chosen that we need to deal with it holistically. And if there's a need for us to get more from the other country because of our bilateral relationship, I think it's a good way to go for it. And of course, you know, Nigeria is struggling with drastically, and forests take about 40% of our international income. So that's why they said that let's look inward, let's see what we can do so that we can have more instead of wasting almost 1.6 billion naira annually importing. So let's see if we can breed this cows in our place and get a better result for Nigeria, which we consume about I think 1.6 million metric tons annually.
Certainly, I mean that's the point that you are bringing up. How will this cost saving actually impact and benefit the local economy. 1.6 billion dollars, or rather 1.6 billion US dollars, is no small change.
Yeah. It will benefit when we have this cow, we import them, and it will encourage public and private partnership. And of course, government can say if you want to come into this ministry, there will be import waiver. Maybe you are supposed to pay 100,000 for importing about, let's say, 700 cows. We can slash it and say just pay a token of 20,000 because we are dealing with national issue here. So it will create more job. You know, agriculture in Nigeria is the next oil. We call it is the next crude oil. So it will also encourage the youth which are battling with unemployment, that they can look inward and venture into it. And of course, it will make government to pay more attention when it comes to training, when it comes to creating mother rearing of cow, rather than just leaving them to locals who will just go about. So government can create a field and say, if you want to invest in this, if you want to invest in livestock, because of the national crisis that we have, there's going to be a training for you free of charge. There's going to be whatever equipment you want to use, it can be subsidized. So it will create more jobs, it will create more opportunity, and of course, so that we can serve the nation the best of milk.
I'm quite interested in finding out, Doctor, why specifically cows from Denmark were chosen. Do they have any special qualities? Why Denmark?
I think they said that they have more vitamins, protein, vitamin D, and all of that, you know, which because they are under the kind of weather where they breed them, how they rear them, you know, and it's, of course, when you are looking for a product in the market, you look to the right, you look to the left, you see the one that can suit your economy, you see the one that can suit your, and of course, don't forget, Denmark is one of the bilateral agreement that the Nigeria and the Denmark they have. They've been enjoying it when it comes to agriculture, when it comes to trade, when it comes to investment, and of course immigration. So I just if they are offering the best bargain, I think is for good. But even when it comes to business, even if you have so many things, you negotiate the one that can bring so much profit and share value. I'm sure that's why there's no more other reason. I'm sure.
Yes. The government has also said that they are planning and have already put measures in place to improve the quality of milk production in the country. Could you highlight for us what some of those interventions are that they are putting in place?
First and foremost, I believe is to encourage public partnership. You know, government cannot do it all alone. Just like I said, create a kind of incentive. If you are going to partner with the government or you are going to invest in livestock so that we can address the issue of the milk shortage in Nigeria, your import duty will be slashed, maybe by 50%. I believe they will go that route. And of course, one of the measures is train the local farmer so that they can expand their production, which is very, very vital. Another thing, I think they will implement a policy that encourage dairy farmers and also encourage research. How are they getting it right in Denmark? How are they getting it right in South Africa and some other nations? What can we do to train our people and also to encourage support to embrace technology?
All right. Thank you very much for that, Dr. Adeni.
You know, how can we do it better? Yeah.
Yes, sorry, I started to lose you there towards the end. But I thank you very much for this insight. Certainly a very interesting and progressive development there as far as Nigeria is concerned and the work that is being done by this Ministry of Livestock. We thank you for your input, sir.
Thank you. It's my pleasure.
Thank you. It's Dr. Adeni Ifetayo, a public affairs analyst and media consultant for the rich, famous and influential. And also a lot of work being done in Nigeria as far as making sure that they don't spend this $1.5 billion US on importing milk, instead being self-sufficient and being able to generate this, also a way of stimulating the domestic economy. It's 21 minutes after 4 p.m. Central African time. This is Africa in Business.
Zilipendwa na Abedi Jean de la Croix.
Mara ya kwanza kabisa uliingia studio ulikuwa ni mwaka gani?
Ya, nakumbuka mara kwanza nimeingia studio hapa South Africa.
Vizuri sana.
Ilikuwa ni mwaka wa 2016-17 kama sisahau.
Swali kidogo la kizushi hivi hapo Durban watu wanafahamu kama wewe ni mwanamuziki?
Ya, hapa Durban watu wengi wananifahamu kwamba mimi ni msanii ambaye anafanya vyema kwenye mambo ya muziki.
Okay, vizuri sana. Hongera sana kwa hilo. Naam, tuzungumzie sasa albamu yako ambayo unapanga kuitoa hivi karibuni. Albamu unatoa lini?
Yeah, albamu itakuwa available, itakuwa tayari next week Saturday, itakuwa tayari.
Albamu inaenda na ngoma ngapi?
Albamu inaenda na muziki 17.
Zilipendwa kila Jumamosi kuanzia saa 12 kamili majira ya Afrika ya Kati hadi saa 1 kamili majira ya Afrika ya Kati.
Africa in Business on Channel Africa.
It is 22 minutes after 4 p.m. Central African time as we turn our attention now to issues of environmental concern, and once again BP under the spotlight in this regard. You'll remember the environmental group Greenpeace. They have raised their concerns over the gas leak that was detected at the Grand Torter Amayam field that's operated by BP, and this is off the coast of Senegal and Mauritania. It has been reported that soon after the gas project's production began, fishermen in the area started seeing an increase in the number of bubbles that were seen in the sea, with the multinational oil and gas company BP saying that the gas leak had absolutely no impact on ongoing production activities from the remaining wells. Greenpeace, on the other hand, says that BP has demonstrated its utter disregard for marine life and coastal communities with this project. For more on this, we're joined by Mamadou Kaliba, ocean campaigner at Greenpeace. A very good afternoon to you and welcome to Africa in Business.
Thank you very much. Thank you for your invitation.
Well, good to have you with us. Greenpeace has once again raised its voice protesting against the operations that BP is conducting off the coast of Senegal and Mauritania. Could you highlight for us exactly what your concerns are?
Yeah, thank you very much for your invitation again. What we should know, it's before the beginning of that project, the way that BP get affected on these gas resources has created a lot of debate. Like many corruption cases are suspected, and at this stage now they are many any survey that are done to bring a response on that corruption case that civil society organization have raised. On the gas leak, as you know, that gas leak happened and BP decided to communicate 1 month after the beginning of that gas leak. And for us, it's very disrespectful. And once when Greenpeace decide to do a press release, BP and Senegal government and Mauritania government, they decide also to take measure. Even now, we do not know if the gas leak is really stopped or it still continue, because the main operator, BP, communicate about the gas leak and minimize the impact. They also come back to say they have fixed it. But as Greenpeace, we have serial doubt on that statement, because we want push Senegalese government and Mauritania government to do investigation to see if really this gas leak has stopped it or not, and not be based on the statement from the BP.
So, Mamadou, how is the GTA project impacting marine biodiversity? And this is particularly around the fisheries that, and the coastal communities who currently rely on that.
Yes, for who knows Saint Louis is one of the biggest fishery areas in Senegal. It's one of the most productive, lot of rich in resources. There is one, it contains one of the biggest coral reef named Jatara. Jatara is an area where all the fishermen on Saint Louis are focused on. It's where they can go and catch fish and come back to their family to uh, to satisfy their means. So the issue is, so now the platform, the gas platform, is implanted on this coral reef. It's one of the biggest, as I said, in the world. As it is implanted on the coral reef, the fishermen are not allowed now to approach the coral reef. There is a perimeter security zone around the coral reef. So now the fishermen are going so far to catch fish, or some of them uh, are inside Mauritania to catch fish and they got arrested, or some of them just decide to abandon that activity and to move to as a captain to for illegal migration.
It's
All
quite
the
clear.
young
It's quite clear, Mamadou, that it has really impacted them very, very directly. What you've done, as well as Greenpeace, is you've called on the governments of Senegal as well as Mauritania to insist on total transparency from BP. Do you believe that the two countries are being pressured into fossil fuel dependency, or are they not being pressured but more partners? Are they being compliant in this? Or complicit,
Yes.
rather, in this?
Yeah, but these two countries are focused to exploit all the oil and gas resources that they have, because according to this government, it's the only mean that can accelerate the development of these two countries. With Greenpeace, we provide a lot of alternatives, because like the fisherman activity in Saint Louis provide more money than gas exploration. It's this kind of fact that we want to highlight. We got more benefit to support community in their activity, in the indigenous community in their activity, than bring oil or gas industry that will be explored for 20 years or 30 years, and after the impacts are here for decades.
In your view, Mamadou, what message does a new fossil fuel project like GTA send to the world, specifically amidst the global push for a just energy transition? It sounds quite contradictory and rather ironic.
Yes, it's really very funny if you see the multinational, they decide to come to Africa to explore the oil and gas, and one of the main speech that they have, they collaborate with the government to tell them that with the resources that they will have from this exploration, they can change the life of their population. And yes, they will change their life of their population, but their life will turn very bad. If you see in Nigeria, the coastal community, they are facing a lot of issues caused by oil and gas exploration. The transition should be led by Africa.
Mohammed.
Africa is submit the imperialism of oil and gas, and the transition does not mean for Africa to be surrounded under the transition led by China, by solar panel and etc. Africa should manage the technology of transition and be the leader of the energy transition or the energy revolution.
Mamadou Kaliba, ocean campaigner at Greenpeace, we thank you for your insight this afternoon. Thank you, sir.
Thank you.
That's Mamadou Kalibai, ocean campaigner at Greenpeace. They say they have made engagements with the likes of BP, who have said that there really hasn't been as much of an impact as they are alleging. But Greenpeace, they're calling for greater scrutiny, greater transparency. And they're towards the end saying it's important for Africa to lead this transition to clean energy and not allow itself to be led by other countries, because the continent is, as he puts it, the imperialists of oil and gas. That takes us to exactly 4:31 Central African time as we turn our focus now to the markets desk, where Thabiso Lehoko is standing by with the latest market indicators.
Business news on Channel Africa. The African perspective.
Thanks to Samyenda. Good afternoon. $1 in South Africa will cost you 17 Rand 89. Namibia, 13 rather. In Botswana, it's at 13 Pula 26, and in Namibia, the dollar will cost you 17 Namibian dollars 89. In Zambia, 26 kwacha 65 to the dollar. In Kenya, the dollar is trading at 128 shilling 285, and in Ethiopia, it's at 134 birr 825. Uganda, 3,000 shillings 613, and in Tanzania, it is trading at 2,000 shillings 681. $1 in Nigeria is trading at 1,000 naira 583. Egypt, 49 Egyptian pound 611. Tunisia, 2 dinar 960. And in Algeria, the dollar will cost you 131 dinar 15. The Moroccan dirham is trading at 9.55 to the US dollar. In Angola, the dollar is trading at 9.12 kwanza, while the Congolese franc is at 2,850 to the dollar. Commodities markets: gold at $3,358 and platinum $1,055 per ounce. Brent crude oil is at $65.39 a barrel. For Channel Africa Business in Johannesburg, I'm Thabiso Lehoko with your financial indicators.
Business news on Channel Africa. The African perspective.
And for the business of sport, over to you, Figile Lingwati.
Sports on Channel Africa. The African perspective.
Thank you, Thami, and good afternoon. Let's start off with the business of sport, and it's the marathon upcoming in South Africa this weekend. The KwaZulu-Natal Equatorial Municipality says preparations for the 98th Comrades Marathon are in full swing. The biggest sporting event on the South African calendar is scheduled for the 8th of June. The 2025 Comrades Marathon features a record prize purse of over $423,000, a substantial increase from previous years. The Comrades Marathon Association, CMA, also announced an increase in prize money across all age categories and team prizes. The prize money includes a bonus of $31,000 for the winners if they break the existing record times for the down run, according to a post on the Running Man. The CMA decided not to increase the entry fee for the 2025 Comrades Marathon. An investment in Africa's youth football is a multifaceted effort focusing on both development and talent nurturing. The Confederation of African Football (CAF) and various organizations are actively investing in infrastructure, education and support for young players, particularly at the grassroots level. Sports analyst Musonda Chibulu says Zambian copper mining companies, both government-owned and privatized, have a long history of investing in football, providing financial resources, infrastructure and support for clubs and players in the Copper Belt region. Chibulu says Africa is lagging behind, with corporate not participating in investing in the leagues and the clubs in Africa like in Europe.
The scenario is that in the years past, in the 80s and early 70s, we had a lot of investment that was coming through the structures that were created by the Zambia Consolidated Copper Mines, a huge conglomerate that was taking care of mining business in Zambia. And in short, ZCCM. There were structures that supported youth football development. And then there was also the school system, which was a deliberate policy to have sport in schools. And there was a lot of expatriates that were coming from as far as the UK, Zambia being a former colony of Britain. And these were trying to replicate what was happening in the UK. Zambia Consolidated Copper Mines, ZCCM, elaborate youth structures were produced in large numbers, and also this give immediate results.
Chibulu says Africa is lagging behind and in investing in the leagues and the clubs, and this is what he had to say about how Europe is working on their investment and youthful development.
fact, we haven't done a lot in Africa in terms of investing in football or sports science, so to speak. If you look at Lionel Messi at Barcelona in their youth structures, when he came from Argentina, they had to feed him growth hormone in order to get him to the height that he's at, for him to be able to be an effective footballer. Now, that doesn't happen in Africa because there's lack of investment. Now, you see, if we were to invest into sports science, and we know that we have helped this player, for example, build muscle if he's a goalkeeper or he's a center back, because you want them, big and so on and so forth. If you did that, then you'll have more confidence because you'll have invested funds in this particular player to build him, physiologically. And so you at a point where you think he's able to play, you will not be scared, to play this particular player or a group of players because you'll have invested in them and it's a deliberate policy.
And the South African Sports Confederation and Olympic Committee, SASCOC, has urged sports federations to submit their proposed list of athletes along with detailed motivation for considerable under the Operation Excellence Program, OPEX. This initiative is designed to financially support athletes with the potential to qualify for and win medals at the major international competitions. SASCOC High Performance Manager Leon Fleischer says the invitation letters were sent out over the weekend and they aim to finalize the list by the end of June.
We can probably get around 80 and 90 athletes onto OPEX in terms of our funding right now. Obviously, we're trying to find other funding options so we can increase to it, but the call for OPEX went out. The first letters will actually be going out today for the definites, and then for the people we want to talk to the federations about and just have that discussion whether they should be on OPEX or not is going to happen. So by end of June, OPEX should be finalized.
For any sports stories you'd like to share with us, please send an email to newsroom@channelafrica.co.za or call us on +2711 714 4459. This is Channel Africa Sport with me, Figile Lingwati.
Sports on Channel Africa. The African perspective. From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
It is exactly 38 minutes after 4 p.m. Central African Time. Thank you to Thabiso Lehuko and Figile Lingwati. If you've got any stories that you believe would be of interest to our listeners, both on the African continent and in the diaspora, please do feel free to send us an email at newsroom@channelafrica.co.za. That's newsroom@channelafrica.co.za. You can also interact with us on the various social media platforms on X, Instagram and YouTube. You'll find us at Channel Africa 1. On Facebook, we are at Channel Africa.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
We turn our focus now on the Zimbabwe Business Expo. It is a platform that showcases a diverse range of businesses operating in the diaspora. The Business Expo is seen as a premier platform for connecting Zimbabwean diaspora entrepreneurs, potential investors and government officials. The platform is aimed at empowering Zimbabweans abroad with vital business knowledge. For more on this, we joined on the line by Thelma Kapesa, Secretary of Zimbabweans in Diaspora Organization. A very good afternoon to you, ma'am. Welcome to Africa in Business.
Oh, well, thank you very much for the lovely introduction. Hello, Thami, and good afternoon.
A good afternoon to you, ma'am. Could you tell us more about the Zimbabwe Business Expo?
So basically, the Zimbabwean Business Expo, it's something that has obviously come out of Zimbabweans in the Diaspora Organization, which I'm going to shorten to ZIDO. And one of the main aims of the Zimbabwe Business Expo is that we are sort of showcasing the investment opportunities that are available in Zimbabwe to our brothers and sisters in the diaspora. So it started off initially in Zimbabwe, then last year it spread out to the UK, where it was very successful. And for the first time ever, we did launch an expo of such a kind in South Africa on the 24th of May.
And the inaugural edition was October last year in the United Kingdom. You've also just had the second expo a few weeks ago in South Africa, as you were mentioning. What kind of support are you offering businesses that become part of this business expo? And why was it important to actually give birth to this? How did the need become identified?
So basically, as diasporians, we did realize that there was actually a gap where, obviously, as children of Zimbabwe, we desire so much to invest back in our motherland. But you would come across so many stories where people perhaps have worked hard and they have attempted to do investments of whatever it is that they'll be wanting to do. However, along the process, things have not worked to plan. Sometimes there's not been enough due diligence, and they end up losing quite a lot of their hard-earned money. So where we come in as Zido through the business expos is we are inviting different businesses from both Zimbabwe and in the host country. And it's obviously a networking opportunity as well. However, having said that, we are also offering a platform where diasporians come into the expo. It's all free of charge, and they get to know the investment opportunities that are in Zimbabwe. Not only are they learning the investment opportunities available in Zimbabwe, they will also be equipped with knowledge of how best executing those investments. So, for example, in South Africa, a couple of weeks ago, we had lawyers, we had representatives from Zimtrade, we had people from Zida, and these are people who will sort of be explaining to people who are wishing to invest back home in a safe way, if I may put it that way. Also, people, sometimes they are not too sure of how to go about doing it, or how do I invest in my province, what investment opportunities are available in my province. And as such, we were actually blessed, if I may put it that way, because we then had the ministers of different provinces coming in to grace the occasion. And they did sort of explain some of the investment opportunities that are available in each and every single provinces that they were representing. And people were also informed of how to go about investing safely.
And
if I may put it that way.
And what are some of the strategic partnerships that have come out of the expo since its inception?
We do people definitely we do have people who have now been introduced, like I'm saying, to the different provinces. People have had an opportunity to invest in schools. We have got right now an investor who has been identified in the Mashonaland Central region. They want to sort of partner, part of the PPP and APPP initiative. Where they are coming in to sort of help to work with the local authority in completing a clinic that had been started within the province, but it just needs to be finished off. We have got schools, like I mentioned, in the Matabeleland region. There's quite a few investors that are quite interested in exploring the tourism section of things. We have got other people who have expressed keen interest in the mining sector, and they have been signposted as to who they would need to be approaching. So there's quite a lot of networking and strategic partnerships that have come up as a result of especially the two expos, namely the UK one and the South Africa one, actually.
Ms. Thelma Kapesa, we thank you very much for your time and wish you continued success as you continue providing platforms for Zimbabweans in business in the diaspora. We thank you for your time.
Thank you. Thank you very much.
That's Thelma Kapesa. She's Secretary of the Zimbabweans in Diaspora Organization. She brings us to exactly 4:45.
From markets to innovation. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
In just a moment, we'll be focusing on some of the developments coming out of Ethiopia. You'll remember yesterday in our conversation with Victor Khumuswano, we did speak about Ethiopia expanding its jets or expanding the number of planes that they're actually going to be having in the air. So expansion opportunities there for Ethiopia. But we'll focus on other issues first. Now, the International Monetary Fund and the Ethiopian authorities have reached a staff-level agreement on economic policies to conclude the third review of the 4-year, $3.4 billion extended credit facility arrangement. Now, the IMF says Ethiopia's macroeconomic performance has exceeded program expectations with better than forecast results for inflation, export growth and international reserves. To break this down further for us, we're joined by Mered Fikri-Johannes, the founder and CEO of Pragma Investment Advisory. Good to have you with us once again. Mered, welcome.
Pleasure to be on the show, as always. Thanks.
Perhaps let's start by taking a look at what some of the key outcomes of the third review agreement between the IMF and Ethiopia are.
Yes. So this is the fourth disbursement, the fourth expected disbursement, and the third review by the IMF program. And now that authorities and the IMF staff have reached an agreement. However, one thing is anticipated is the IMF executive board to approve it, so that Ethiopia will get the fourth disbursement of $260 million, which is around 191 HDR, right? So, but in order to do that, the IMF staff would expect the Ethiopian authorities, with especially the Ministry of Finance, to announce the memorandum of understanding, the agreement in principle, in terms of the restructuring of the debt between its creditors. That is expected to be announced in the coming week. And after that announcement, the IMF Executive Board would approve this $260 million of disbursement. And mind you, this third review is very much important and is most anticipated because the third review would give the most anticipated, especially from the Ethiopian bondholders, the DSA report, the debt assessment, the debt sustainability assessment in terms of the country's position in terms of servicing its foreign debt. Because on the second round, that report was contested between the bondholders, and now on the third review, the executive board would approve it, and will have the DS report. And based on that DS report, the authorities of Ethiopia is expected to sit down with the bondholders this coming August. And we're expecting a final debt restructure announcement between the bondholders and also the creditors by September or October.
It's a really glowing report that's coming out of the IMF. The lender says Ethiopia's macroeconomic performance has exceeded the program expectations. What are the targets that Ethiopia met leading up to this specific agreement?
Absolutely. So like, at least if you see the macro numbers from a macro perspective, okay? So export has reached almost $5.2 billion. Mind you, Ethiopia's export, before we floated the currency, it was up to maximum, it was up to $3.5 billion. But in the past 9 months, we garnered around $5.2 billion in the past 9 months, right? And we are expected to finalize the fiscal year up to $6.5 billion or up to $7 billion. That would be the first time in Ethiopian history. Remittance in the past 9 months, it has reached $5.6 billion. This number used to be a fiscal one fiscal year number, but it has gone up almost by 32%. The international, our reserve currency of the central bank has gone up to 200%. We used to have import of almost less than, on a weekly basis, our reserve for import used to be less than a month. Right now, our import bill in terms of our given to our reserve is standing around up to 3 months. So all these macro numbers are very much encouraging in terms of having garner the foreign currency that was expected after floating the currency. And mind you, it has left almost 2 months to finalize the fiscal year. Actually, 1 month. By July 7th, the fiscal year will finalized, and will be the first year since Ethiopia has floated its currency and then is undergoing the IMF program. So when you see the macro numbers, this is very much encouraging.
Yesterday, Mered, we were talking about Ethiopia's expansion plans for its fleet, and we're looking at Ethiopian Airlines hitting 5.6 billion US dollars in 9 months revenue. Could you talk to us about exactly how they've managed to achieve this and their performance thus far?
Yes. So this boils down to two things. There's a significant demand for travel, right? And then Ethiopian Airlines is also expanding its new destination. At least it has increased by 4 new international destinations. It has received 10 new additional airplanes. So this has increased its revenue by 8% compared to the previous fiscal year. And in terms of passengers, it has increased in the past 9 months up by 13%, up to 14.5 million passengers have been traveling through Ethiopian Airlines in the past 9 months. So this is the key drivers for the increase in terms of its revenue. So it is expected that it would finalize the fiscal year up to close to $8 billion, given the numbers that we have, and then it is expected to finalize in terms of the passengers up to 17 million passengers who travel, and in this fiscal year. And more importantly, I think, yeah. Go ahead.
All right. Unfortunately, we're going to have to leave it there because of time this afternoon, Mered. But we thank you very much for a rather glowing update coming out of Ethiopia this afternoon.
Absolutely.
Thank you, sir. That's Mered Fikurahannes. He's founder and CEO of Pragma Investment Advisory.
The EU-African SME Summit. Join more than 200 change makers from June 19 to June 21 at the Johannesburg Stock Exchange. It's where trade meets transformation. We are building Africa's future through AFC FTA, the EU's global gateway, and the power of small businesses. It's an opportunity to spark collaboration and unlock Africa's investment. Presented by the European Entrepreneurs, the Pan-African Chamber of Commerce and Industry, and Shared Value Africa. This is a summit not to be missed. Register now at euafricasmesummit.eu. From markets to innovation. Africa in Business with Thami Ngubeni covers it all. With Africa's future in focus, Channel Africa, the African perspective.
Now, the African Continental Free Trade Area Trade Agreement is the world's largest free trade bloc. It opens access to potential markets of about 1.3 billion people and an estimated combined GDP of 3.4 trillion US dollars. Still, intra-African trade lags far behind other blocs. In contrast to much higher levels of bloc trading in Asia, North America, as well as countries within the EU. Then the African Continental Free Trade Area should be leveraged to position African products more relevantly across global and intra-African markets. We hope to be focusing on this before the end of Africa in Business today, as we will be joined by the Executive Head of International Trade and Business and Commercial Banking at the Standard Bank Group. We'll focus on this as well as a place like Nigeria that was recently ranked as one of the largest economies in Africa alongside South Africa as well. And we'll be looking at the role that Nigeria has played as West Africa's largest regions, or rather the largest economy in the West African region. It is exactly 4:54 Central African time. Do stay with us. This is Africa in Business.
Connecting Africa to the world. Africa in Business with Thami Ngubeni brings you the latest insights on Africa's economy.
Time allowing, we'll be able to cover that story for you. But in the meantime, South Africa's Department of Mineral Resources has released a new fuel price. This follows the dismissal of the Economic Freedom Fighters Fuel Levy Challenge. The party had argued that the Finance Minister, Enoch Godongwana, had taken an incorrect approach in his decision to propose an increase in the general fuel levy. EFF Treasurer General Ompile Mwatwe.
So Part A is agent court interdict. to stop the fuel levy increase that is expected to go tonight. And then Part B deals with the actual levy increase that we are challenging in court, that the minister has used the wrong act. So, as with the VAT, we argued that the minister does not have powers to bring in a national tax outside of the scope of the Money Bills Act. So if you read Constitution Section 77, it's very clear that any national tax that gets to be introduced, it has to follow the Money Bills Act. But the difficulty with this one is that it doesn't do that. And he himself says that in his budget that he's introducing a tax, but he wants to bring in that tax through a regulation, which is why there's a government gazette with a notice of the fuel increase. And we're saying, but you don't have powers to do that. The powers that you have is for you to leave it to Parliament. You are a member of the executive, and you have presented the fiscal framework and the revenue proposals, which is now a product of Parliament, and allow the Parliament to take its course. And the parliamentary process has started in the committee from Friday, the 23rd of May, after the tabling, which was on the 21st of May. So on the 23rd of May, the minister came to brief the committee on actually what is it that he had tabled on the Wednesday. And the EFF came up very clear that we reject the fuel levy on Friday, the 23rd. So it did not come with a letter on the 26th. It came actually on the 23rd. If you were to go to the parliamentary recordings, you will find it in the recordings of Parliament that on the 23rd of May, already the EFF made it clear that we rejected the fuel levy, followed by, of course, the letter that came in on the 26th of May, which asked Minister the question, where did you rely on? What did you rely on? Which powers do you have? To this day, we're still waiting for his response. To that letter, he only acknowledged receipt of it. So we're here because our letter has not been responded to. And there was no response from the minister. There was no gazette until yesterday.
And that's how we come to the end of today's edition of Africa in Business, as we hand the reins over now to Vue d'Afrique with Joël. Bonjour Joël.
Bonjour Thami, bonjour à tous les auditeurs de Channel Africa. Sur Vue d'Afrique, aujourd'hui on parlera de la crise sécuritaire à l'est de la RDC et aussi de la fin ce lundi au Burundi de la campagne électorale en vue des élections législatives. Merci de rester connectés.
Thank you so much, and that's how we come to the end of it for today. Thank you to our entire team. News with Dwalane Tulengwape, Economics Desk, Tabiso Lehoko, and from the Sports Desk, thank you to Figile Lingwati. Thank you as well to our team behind the scenes, our producer Mabo Boloka, as well as our team on technical, as well as from the social media desk, Ndando Lutuli, technical producer, and Dumi Selema, our social media. From myself, Thami Ngubeni, and the team, until tomorrow, you have yourself a great one.